Hello and welcome. My name is Greg Diamond, and I'm the editor of 10 Stock Trader. Today is the next addition to the Technical Analysis Masterclass, in which I will discuss the legendary methods of W.D. Gann. Let's go ahead and get started. So, when we're looking at Gann, there's a few things I'm going to discuss today. We're going to look at some of the basics of Gann. We're going to look at the square of 19, which is something everyone watching this right now can use without a fancy Gann trading platform or any other software. All you need is a chart software program with price and the date. I'll show you how to combine the square of 19 with other methods we've used in 10 Stock Trader and the other videos. And then finally, we'll have a look at what 2022 can bring based on Gann's major time cycles. So let's go ahead and get started. So when we look at Gann, what his major discoveries were, there's a lot to cover, and I cannot cover it all in this video, even in one book or 1 year. It just takes a long time to fully grasp the complexities of Gann and his discoveries and his methods. But what I will do today is start you down the path of Gann and where his discoveries came from. And it's mainly nature itself, and this is sometimes hard for people to comprehend, but what I want you to do is have an open mind about what is possible and what W.D. Gann discovered as it relates to the markets. So really, everything is mathematically connected through nature, and this is what W.D. Gann discussed. And he talked about natural law for the basis of his methods, and he said, mathematical science, which is the only real science the entire civilized world has agreed upon, furnishes unmistakable proof of history, repeating itself, and shows that the cycle theory, this is where markets come into play, is the only thing that we can ascertain to the future. And if you've read technical analysis before, if you've seen my other videos, I talk about this all the time. The future is but a repetition of the past. Things happen. As the Bible says, the thing that has been is that which will be. If there was something that happened in the market 60, 70 years ago, 90 years ago, 7 years ago, 10 years ago, which I'll get into, that repetition is going to happen sometime in the future. The key is how to find it, and that's what Gann did. And again, so history repeats, and this is when we determine when. That's the key to Gann analysis. Gann analysis is about time, and time is the most important thing because that's when something happens. That is really the true value of Gann analysis. So he also went on to discuss how to measure time. So one of the things that he said, and he keeps this very simple, but I think it's very important, since all time is measured by the sun, we must use the 360 degrees of the circle to measure time periods for the market. Okay, so what is he talking about here? He's really discussing how things move in nature. He's talking about a full cycle, a full revolution, 360 degrees. Now, before I move on, this is where most people start to get a little hesitant about Gann because I'm talking about sun and planets. This is where people start to dive off. This is where some people might laugh at this, think it's a financial astrology. It's just not the case. You're looking at it all wrong. What Gann is referencing when he's talking about the sun is based on natural law. It is a natural unit of time, which is how we measure time. So think about it like this. The entire civilized world, again, we agreed upon this as this is the mathematical science that we agree on. This is how we measure time. So if you agree on the standard measurement of time, 24 hours in a day, when summer starts, like all of us do on planet Earth, then guess what? You actually agree with Gann's statements on natural law as it's reflected in the markets. What you need to do now is just take the next step to see how he applies natural law to the markets. So that's what I'm going to do here. This is getting to the next step. This is what's called the square of 19. So if you think about the last slide and you talked about a first full circle, 360 degree revolution, a full cycle. When we break that down, you get the square of 19. Well, where does 19 come from? Well, when you square, again, he talks about mathematical science, geometry. When you square 19, what do you get? You get 361. This is close to 360 degree full circle, full cycle, 365 days in a year. You kind of see the correlation that he's taking natural law and applying it to the markets. So within the square of 19, then we can count backwards, or you can start from 1, whichever you want to do, and you square those increments within that cycle. And then within that cycle, this is where you have your inflection points. This is where the when comes in. This is how time is measured. You know, you can go through the math, and I've highlighted some here with stars that I've found in certain stocks that I like to use. They tend to, for whatever reason, have a bigger pull on, a bigger inflection point, whether it's a high or low, or a big rally or a big crash, whatever it might be. But what I would say with the square of 19 is, whatever stocks that you like to look at, whatever markets you like to look at, research. Do as much research as you can. Use any different type of time frame and see which one of your stocks, your markets, react to this. Again, when we think of square of 19, you have to, again, go back to this is natural law. This was what completes the full cycle. And the important part of applying this to your charts is you have to start from a major high or a major low, or a major gap up or a major gap down, because that is telling you that, hey, the market is telling you this is this is an inflection point. So from that point, from that big move, is where you'll see a full cycle complete, and then we want to find out within that completed cycle, what are the inflection points within it. Look at daily, weekly, monthly bars as well. That's going to be on a 50 or 100-year timeline, so you're probably not going to look at those all the time. The daily and weekly are going to help you out a lot more in terms of the inflection points that you want to trade. And that's the other thing that I want to stress, that some people, well, Gann analysis, I want to see when the next big crash is. I want to see when the next big bottom is. I want to see when the next big rally is. That doesn't happen all that often. The important thing about Gann analysis, the important thing about the square of 19, is to understand that when you see these inflection points, it might not look that great when you're looking at it as a big chart and a big move. Think of them as trading opportunities. Think of them as a way to make money. Don't think of it as it has to be a crash. It has to be a big rally. Think of it in terms of how a stock is trading into one of these inflection points, the square of 19, and then how you're going to trade around it. It helps minimize your risk, but it tells you when. Again, time is the most important thing here. So let's go to a real example. This is an AMD weekly chart, and I did not put every single square count on here from the previous count, 1 through 19. I just wanted to show you how this is applied to a chart without having too many lines on here. I can't even tell you how many charts I have of many different stocks that I look at, and I do have everything counted out. But just for the sake of clarity, I've just have a few on here. So when you look at AMD, again, as I started with the square of 19, where do you start to measure time from? This is the March 2020 low, so I started counting the square of 19. So right off the bat, and again, this is in weeks, square of 4, 16 weeks from the low. This marked a really nice bottom, and it was a nice rally. Guess what happened? Square of 5, that's 25 weeks from the bottom, that marked a top. So again, you can see, and it wasn't a huge top. It wasn't a crash. It wasn't, alert the world that everything's going to end. Guess what it was? It was a trading point. It was an inflection point. It was a way to make money or to reduce your exposure or to trade an option around it. That's the important thing to remember when we're talking about square of 19 and Gann and time. Now, moving forward out, you can see the square of 8. This is 64 weeks. And you might say, well, it didn't catch the exact low. I'm going to get back to this in a second. But what it did do is it caught a higher low, and that led to a nice big rally. Now, in the first part, I mentioned that there are certain squares, inflection points that tend to have bigger pull on a market move than others, and this is a perfect example. So this is the square of 9. This is 81 weeks, and for whatever reason, AMD really just loves the square of 9 in terms of weekly and daily. And you're going to want to note when square of 9 is going to happen again in the future. So this is something that I'm going to be paying attention to, but going down the line. But look at what this move did. From the March 2020 low, you counted out 81 weeks, which again is a square of 9. It nailed the bottom. And then look at that huge rally. So this is where time becomes important. This is just again, anybody can have this. All I have on here is the date and then the price action on a weekly time frame. So if you have a basic charting software program, you can apply the square of 19. You can apply Gann methods right now. So here is the daily chart. So this is the weekly chart. I wanted to go back to the square of 8 because remember, well, you might say, well, that didn't catch the low, it caught this. Well, this is what I want to point out, okay? If you've seen my other videos, if you've seen the Elliott wave video, I talked about wanting to capture wave 3 moves. These are the big moves you see up and the big moves you see down. What I found often on, whether it's specifically daily because it's easier to see, the square of 19 Gann method really does a great job of capturing these wave 3 moves. Now, as you can see here, this is the first leg up, wave 1, wave 2, square of 8, 64 weeks from the previous mark. Again, this was on this chart right here. This is on the daily chart, and if the daily chart you wouldn't have caught it, but on that weekly chart you did, and what it was telling you is like, hey, this was the first leg up and you're going to get this huge third wave move. That's what's important. That's why you have to dig down and use different multiple time frames to see which one it's going to tell you about. And then I'll also say what did mark the bottom. If you go back to the daily chart, March 2020 low, the square of 17, which is 289 days from the March low, it marked a really nice bottom. I mean, it called the bottom right to the penny. And then you have this huge move up. So, you could keep going and keep going and keep going in terms of look at Caterpillar, look at S&P, look at gold, look at bonds, look at oil, look at soybeans. What's great about technical analysis, but it's also great about Gann's methods is especially the square of 19. Anyone can use it. You can use it on any single time frame. If you're a short-term trader, you're trading during the day, use 144 minutes. Use 289 minutes. Just do the research. There is an inflection point within the market off of a major low or off of a major high based upon that square of 19, based upon that full cycle, that full rotation. And that's what's important to note about square of 19. So, and you asked, again, probably the most important part is combining this with other things. Use the RSI, use the MACD, use whatever other momentum indicator you like to use with the square of 19 and with Elliott wave. And you're really going to see how these inflection points come together, and it's going to give you more tools to be able to trade successfully. Final thoughts on square of 19, research as much as you can, figure out how square of 19 fits into your philosophy, whether you trade 10 times a day or 10 times a year. It's really going to help you to find these moves. And again, use multiple time frames to help that process. That was the short-term, relatively speaking, method of WD Gann that everybody can use. And now we're going to get into some of the longer-term cycles. Now, the longer-term cycles with Gann can be a little bit confusing because he has a lot of them. But again, I discussed this at the beginning, which is understanding that whether it's 60 years or 70 years or 90 years or 7 years, understanding how those cycles have played out in the past, and as Gann tells us, will play out in the future. The critical part is trying to solve that problem. Okay, which cycle is going to influence the current time frame that we're in? So what I'm going to do now is I'm going to have a little fun, and we're going to go through what Gann's process was for figuring out the current year. Right now it's December 23rd, 2021. So I'm going to do a forecast for 2022. And I'm going to do that based on what Gann told us to do, which is he had a specific set of cycles to get an idea. It's not perfect. It isn't meant to say, hey, look, on every single day this is going to happen. It's a general idea of what we can expect for the next year. And so what he did is he took what he called his great cycles or major time cycles. And that's the 90-year, 60-year, 30-year, 20-year, and 7-year. And you're probably saying, well, how do I apply this? I don't understand. Okay, so this isn't trading advice. This isn't something that you need to say, well, this was wrong or this was right. This is an idea to give you what the next year is going to bring. And if you follow me on the app regularly, if you see my weekly market outlooks on Monday, you're going to see how I'm going to apply this in 2022. Basically, I'm expecting a lot of volatility, and I'm going to show you why. So this is the 90-year cycle. So if you take 2022 minus 90, that gets you to 1932. Now, before I go on to this, there are those out there who may have said, well, the 90-year cycle was supposed to be back in 2019, and that was 1929, and this was supposed to be some major crash. You can't look at it as specific year to specific year. You have to look at it in terms of what the volatility was during a certain time frame. In this case, a huge high to a huge low. So if you think about that spread from 1929 to 1932, what do you get? 2019 to 2022. So the 90-year cycle is still very much a factor here. And I think it's going to be much of a force for the upcoming 12 months. So let's take a look at what happened based on this 90-year cycle. Extreme volatility, the crash in 1929, Great Depression in the United States, but look what happened, okay? So in 1932, there was a major low, and call it June, July, we'll call it the summer of 1932. Now I want you to remember that. Let's go to the next cycle, 60-year cycle, 2022 minus 60 is 1962. This is interesting. Again, we had a huge move down, a lot of volatility. Guess what? It bottomed in June, the summer of 1962, just like 1932. So then we go to the 30-year cycle, okay? Now, not as volatile as the previous two, but what we had a cycle high in June, the summer of 1992. And this is what's important. So I discussed earlier when you're looking at the square of 19, it doesn't have to be a crash, it doesn't have to be a major low, Gann's brilliance and his discoveries are the inflection points, not necessarily a high or low, when these inflection points happen. So see the similarities, there was a high, there was a low, okay? So then we go to the next one, 20-year cycle. This is 2002, 2022 minus 20, 2002. And very similar to the other thing, you get this huge move down. This was after the dot-com crash back in 2000, and you have these huge inflection points. You had a bottom here in July. It didn't actually bottom out till September or the fall of later that year. But again, it paints the picture. We have more volatility with a huge inflection point that year. Okay, and then we get down to the shorter year cycle, 7-year cycle. Now I remember this one specifically because I was trading this, and this is in 2015, and this is when China's credit in the economy, it was really bad news. It sparked chaos in global markets. And what did we have? We had a significant top in May and June, very similar to everything else we've watched. We had a significant top and a significant bottom. So let's take all of these into account, pull it all together. Every single major cycle that Gann tells us to look at, they all had a significant inflection point. 80% of which all happened around the summertime, call it June, July. So based on that information, based on that analysis, let's talk about probabilities. If we go and we listen to Gann and we think about the inflection points, we think about when, we think about time. We take every single one of those major cycles, what can we expect? I think it's going to be very volatile, and I think there's a high probability that there's a major inflection point in the summer. Now, how do we know what that's going to be? We don't know. But it helps you understand what is possible. And as I say to all subscribers, when you're talking about Gann, the most critical factor of when to determine whether it's a high or a low is determine how the stock or the market you're looking at is trading into this time frame. So let's say that 2022 starts out rallying, and then it crashes, and there's a major low heading into June, July, the summer months. Based on this long-term cycle analysis that Gann has taught us, guess what? That's probably going to be a low. And if it rallies, it's probably going to be a high. So these are some of the things that are going to determine what 2022 is going to be like. So those are two major methods of W.D. Gann that you can really start to use right now. You can start to apply this yourself. It doesn't take fancy platform. It doesn't take any type of mathematical genius to understand these things. And Gann was a mathematical genius, no question about it. But these are some basic things to start you down the path of Gann. And I hope you continue it, because when you see how brilliant of a man he was, when you see his methods, it really starts to come together about how markets behave, how they interact. And this is something that will get you started, and then I will continue to educate and inform for some of the more advanced methods that Gann uses. But as you know, I routinely do this in the 10 Stock Trader app, so if you haven't already, I highly recommend that you download that. And we will continue to use Gann, and I really appreciate you watching. Thank you.